And here we are once again, Contingent on You Listening podcast. I'm your host, StevePloetz. Co-host next to me, Isaiah Hernandez.
Welcome, everyone.
The Contingent on You Listening podcast, a podcast talking all things real estate. We talk things about the market, about what's happening for consumers, but also things on our side of the table in terms of agent interactions, things we can do, lead generation, lead conversion, networking, et cetera, et cetera, et cetera. And so,
Speaking of networking, we had a conversation, Steve, you and I earlier, a few episodes back, and we talked about, as I started to grow my business and start my real estate business, it was important to establish a network in where you're doing business at. Right. And you referenced many circles that you were in and what you did. And so by doing so, I've always been a part of an alumni network within my fraternity here in San Diego.
Yeah.
And so there's a lot of professionals there. And so one of those, who I'm happy to say we have as a guest today, is Jason Gordon. And I'm happy to have him all here. Jason Gordon, how are you doing, man?
I'm doing great. Thanks for having me.
Hey, thank you for being here with us. So why don't you introduce what Jason does, who Jason is, and then we'll dive right into it.
So Jason Gordon, a.k.a. Gordo, is a senior mortgage loan officer in San Diego. He is with AmeriFirst, correct?
Correct, yes.
Yeah, so wealth of knowledge. He's been in the business for over 20 years now as far as lending, right?
Yes, indeed. I am battle tested.
Yeah, you've seen, my goodness, in 20 years. So let's see, that takes us back to the early 2000s, late 90s. You've kind of seen all markets here. You saw the big rise up, the big fall, the big comeback. It feels like your industry is always changing. The newest thing and is these temporary buy downs, 2-1 buy downs, 3-2-1 buy downs, 1-1 buy downs. What are some of the changes that you're seeing in the industry, and what are some of the changes that you foresee coming?
Well, there's always going to be changes with what I call external variables, things we don't control that directly impact both my side and your side, right? Real estate and mortgage, interest rates, housing values. I think underneath all of that is basic supply and demand economics, right? You want to buy when everyone's selling, you want to sell when everyone's buying. And during the pandemic, we had such a unique combination of variables. We had what we can all agree was very bad news for the economy. The biggest spike in unemployment, a lack of consumer confidence. Many people didn't want to leave their house for a long period of time.
But great for interest rates.
And bad news for the economy is great news for mortgage rates, right, and vice versa on that. And so, of course, I became a very popular person during the pandemic. People tend to like me a lot more when I'm quoting lower rates. It's kind of weird, but that just happens. And then you accompany that with, okay, low rates, buyers came out of the shadows all wanting to buy at the same time.
Right.
You want to sell when everyone's buying. What a great time to be a seller.
Yeah.
People were lining up, going, okay, well, as a seller, how bad do you want my house? Who's going to bid higher? I'm not going to do any repairs, no seller concessions.
Waiving all these contingencies. I mean, like waiving appraisal contingency. I'm sure you saw people waiving loan contingency, people giving up their firstborn child and a date with their wife in order to get a property. Like that was the market that we stepped into. And it feels like at the end of 2022, the faucet shut off all of a sudden.
Yeah.
And it was powerful for me as a realtor to discover how important interest rates really are when it comes to the market overall. I had never seen, I started in 2005, I hadn't seen it as significantly, feeling like, yeah, if a bump in the interest rate by a point, there's so much demand, there's so little supply, like what's going to happen? Powerful to watch that the faucet basically turn off, and buyers that I felt like would always be willing to make a move, now all of a sudden sitting on the sideline going, maybe we're going to wait and see.
Well, it was a hard time being a buyer during that time because you'd have these, bidding wars. And of course, we've all helped enough clients to know that when they're buying a home, it's an emotional process. I mean, mentally, you're going there saying, okay, this could be our home. We're going to raise the family here. Our kids are going to sleep in that room. And now the finance part, right? You're bidding and you have a counter offer and you think, okay, let's go higher. And you go back and forth and there's all this emotion only to then be told, hey, you didn't get the house. Someone else outbid you. That happens 2 or 3 times or more. You get this buyer fatigue. And I had clients that each time this was going on, I would work the pre-approvals for them. I'd update their numbers. I'd call the listing agent and say how great the buyers were.
Right.
And at some point, I would get these responses from different clients. Hey, you know, it's not meant to be. It's not God's way. We tried. We're just going to wait. And heaven forbid these were contingent buyers selling property A to buy property B. And one of you gentlemen are the agent helping on both. You do all this work in good faith, only for them to say afterwards, you know what, selling A was not going to be a problem. It's getting the seller on B to accept my offer contingent on A selling first. I'm just not going to do anything. We're just going to stay put. Now, what do you have to show for all of your efforts?
Yeah, that's
a big goose egg.
That is what I respect about realtors is you can come home with nothing to show for an 80-hour work week. Like for all the bad things that get said about agents and I would say lenders too, nobody gets paid until the deal closes. So that from that standpoint, you mentioned something that kind of when things were bad in the economy overall, that was not when you looked good, but certainly the interest rates were good. But I would say for you personally, you kind of doubled down on that because Isaiah's told me, and we kind of talked off air, that you also do something when the situation is not ideal for clients, that becomes a big chunk of your business, which is divorce, right?
Yes.
So tell us a little bit about that and your role within that.
Absolutely. So I always say whenever you mention divorce, and especially in our context of being commission generating professionals, I always want to just give a quick disclaimer. I always say that, we live in a world where any ambiguity can and will be used against us in the court of law. So when I mention divorce, there's no disrespect to marriage. There's no celebrating divorce. We're certainly not breaking up marriages in order to get a commission. What I realized years ago was that there's a huge disconnect between the legal community, the tax community, the real estate community, and the mortgage community.
I agree.
And these poor divorcing homeowners are left to kind of connect all the pieces together. And I had a situation, this is back in the early 2000s, and I'll just round off some numbers just for the ease of conversation. She was referred to me by a mutual friend. She came in my office, sat in my conference room with a court order saying that she had 60 days to settle the affairs of her home. And it was already two or 3 days into that. So she had, 50 some odd days left. And she shows me the court order. And let's say the house is worth $500,000. They owe $400,000. She's the in-spouse staying in the home. He's the out-spouse moving out. As most out-spouses kind of demand, remove me from the lien and give me half of the equity.
Right.
So she was seeking, just for round numbers, a new loan for $450,000, right? The $400,000 to pay off the existing, $50,000 was half of the $100,000 in equity. And it took me within a minute or two of speaking with her to realize you don't qualify.
Right.
And there was this awkward moment, and she got emotional, defiantly grabbed the court order and waved it in front of me and says, my attorney said, if I just showed this to you, you have to lend to me. And I had to be the person to, very gently and diplomatically break the news to her. And, she left crying. And the person who referred me to her told me after the fact, months later, that this was a very contentious divorce. She tried to go back to the ex-husband and say, hey, let's just sell the house or whatever. And he says, you've already agreed to make me whole. I need $50,000. I need to be removed from that loan. And you now have X amount of days left.
48 days.
So she panic sold, incurred all the cost to sell, realtor fees, escrow and title, some mild repairs. She walked with less than $10,000. He walked with $50,000.
Right.
And she had promised her daughter, her teenage daughter, that they wouldn't have to move. She wouldn't have to change schools. And I remember just thinking, there's got to be another way.
Absolutely.
So I did a proactive deep dive about 6 years ago. And there's a whole bunch of alphabet soup after my name. I won't bore you with all the credentials, but I'm the only person in the country who's gotten all 4 of these credentials. And it's really helped me learn a lot of perspective in terms of what the attorneys are doing, what the Fannie Mae, Freddie Mac nuances and their guidelines are looking at with divorce, helping real estate agents out.
Right.
I mean, if you've ever helped a divorcing couple sell the marital home, you don't have these two owners paddling in the same direction.
Absolutely.
And so it takes a special kind of human before you're a professional to be able to navigate through these. So I do a lot of these, and just to kind of bring it full circle, I never advertise to consumers directly. Like, hey, how's your marriage? Well, if it ever fails, call me. That's not who I am. But I do reach out and partner with family law attorneys or divorce attorneys And they pull me in on that discovery period to see if the in-spouse can perform. And if they can't, let's gently tear off the Band-Aid, prep both parties for sale. Maybe I can help one or both of them with a new home purchase.
I love it. And so here's kind of where I want to segue this to is Isaiah has done a nice job of creating this paper of all these great questions. And so here's where I'm leading this is you've built this kind of business through a network of people. You've built relationships, it sounds like, with divorce attorneys, with tax professionals that understand divorce. I like what you said about the way I interpret it. You're basically the glue between those people so that you can give the client that is going through a very hard financial time, emotional time, like, my goodness, just everything's getting ripped apart, both literally and figuratively. And you can step in and say, hey, let me look at your financial situation. Here's what we need to do. So my question is, you've built those relationships over time as an experienced quality lender. Now you've got relationships with divorce attorneys, et cetera, I would assume. The question that I have is, as a new agent or as an experienced agent, how does it go building a relationship with you? Like, what would be your recommendation for since our viewership is mainly realtors, and every realtor wants to have a great lender, somebody that they can trust, somebody that they can hand stuff off to. It seems like it's an easy relationship to start, but how do you start?
Well, I mean, you'll find that first and foremost, not every loan officer or LO is alike. And if we were to divide them into one of two categories, you have transactional and you have relational. Transactional are these inbound call center lead converters that work for the companies that you see and hear on the radio or TV every hour with their commercials. And respectfully, I'd say steer clear of them because they're in a sales boiler room and kind of environment. They're not looking long term. They're looking to make sure they don't get fired next month for being on the low end of the totem pole on the ranking reports. Relational is really where you want to hunt because you have these reputation-based professionals who are partnering. The key word there is partnering with other relationship-based professionals, real estate agents, financial planners, CPAs, attorneys. The big word that comes out of here is accountability. Yeah. When you're a relationship-based loan officer, there are no bad days. There's no bad escrows. There's no, hey, I'm sorry I did this or did that.
Right.
You just have to see a bigger picture. You have these intangibles of accountability, emotional intelligence, empathy that you have with your partners and with the clients that you're serving together. And that resonates because you're thinking long-term, not just trying to get this commission now and never talk to these people ever again. Hey, I want to just go through the entire client life cycle. I'll help you buy your first home, maybe a condo, help you upgrade to your new home, maybe downsize at some point. When the kids are out of school, maybe a couple of refinances in between, at some point a reverse mortgage. Let's have a whole life cycle of a relationship. You can't do that when you're just thinking short term. And so with that in mind, to get to your question,
the next commission check, exactly.
Yeah, to get to your question, I would say if you are a true relationship-based real estate professional, you want to seek out those relationship-based lenders. And one easy way to find out, Google their first name, their last name, and the word mortgage. See what pops up. If you can't even find a LinkedIn profile, they're a transactional base. They're hiding behind the curtain of their company that's supplying them leads. Or someone like myself, if I was to mess up on one of Isaiah's escrows, and Isaiah shows up at your staff meeting in front of 100 plus Century 21 agents and says, don't use Jason Gordon, he's horrible, that's hard to recover from.
Absolutely.
If he said, hey, don't use Rocket Mortgage, everyone's like, well, what were you thinking, Isaiah? You should have not allowed them to be part of that. And that's not a dig on Rocket Mortgage, but it's just a big transactional-based company with some, usually a faceless and nameless loan officer behind them. But with that said, network with them. And more often than not, we're out there trying to meet you.
Yeah.
So just take our call.
So going back to like what you were just saying was like being relationship based. I think that was something that was important for me starting out. And like, thankfully I knew you before I got my license. So I always had this relationship with you through our alumni network. Mm-hmm. And so when I got my license and I was like, okay, this is the year I'm going to go full in, I need to get with a lender. And first person that came to mind was you, because I know how great you are, not just with our network and our other friends, but also I know how you are on social media and so forth. And so, talking to you and then asking like, hey, do you work with first-time home buyers? Because look, I know you're in the business for 20 plus years. Like, would my clientele still be beneficial for you? Because I know lenders who will automatically be like, no first-time home buyers, too small, exactly.
Yeah.
And so that was important when you were like, no, I'll never turn them down. And I was like, okay, I'm glad I got like someone like you, Jason, to be able to be in my back corner that I can always refer potential clients to like that. And so leading into the next question is, besides networking for realtors with lenders, what's most important for lenders out of realtors? Like, what is it that you would look forward to most with networking with another real estate agent?
Well, I think in the end, it really begins with the word partnership, as I was mentioning before, because true partners, they edify each other. They have each other's back, right? And it's really difficult as a lender, and I don't want to generalize too much. I'm not the spokesperson for all lenders out there, but I know as a lender, if I have a realtor that is really carrying unrealistic expectations, I realize there's no way to fulfill that. For example, I need you to answer the phone 24/7. If I call you, if we were, otherwise someone else is going to call, or, hey, Jason, I called you, you didn't answer, I gave this lead to somebody else.
Yeah. You
should have answered the phone. And, what I realized long ago, because I used to be that person that would answer the phone. I'd be in the dentist chair going, hang on, let me answer the phone. Because I didn't want to lose that business. And at some point you realize you have value you're providing, and there's no ego attached to that, but there's a value you're providing, but you are human. You are going to sleep. You're going to have, what if I'm on another call with a different client of yours and I'm really going deep into a conversation about how a monthly payment is calculated, how their funds to close are calculated. And every time we're talking in the middle of a concept, I pause and say, hey, I'm getting another call. Hang on.
Right.
And 45 seconds later, I come back on. Okay, where were we? That's not honoring the client. So I think behind all that is partnership. If a client's shopping another lender, or says, hey, look, they think your rate's too high, let us know. Obviously we're not trying to give higher rates or higher costs, but sometimes there's an ability, if we know what's going on, bring us in. I can go to a manager, get an exception if needed. But true partners are going to, and the same thing for you. If I got them pre-approved and they went and found a different agent, it's courtesy.
Yeah.
If you are truly partners, you just know to do that.
Yeah. If it's really a partnership, then let's act like it's a partnership, and let's not act like I have all the cards and you're just working for me. Right. Because I do think that that's one of the things that's really tricky in your shoes versus in our shoes, is that I feel like you have two clients. You have the buyer, but you also have the agent. Mm-hmm. And so you got to make sure that they're both up to date. But you got twice as much stuff to do. As an agent, I feel like I need to keep the buyer in the loop. Yeah. But I don't need to also, certainly I need to keep the lender in the loop, but I don't need to service the lender the way I service the client. Mm-hmm. And I feel like in your world, you do need to service the agent the way that you service the client. And that, I think that complicates things.
Yeah. And it's painful as a lender. Yeah. Well, you think about it, and this, again, it's not an us against them kind of thing here, but lenders spend more money as a whole in advertising than realtors do.
Oh, absolutely.
Think of Rocket Mortgage. Think of all these big banks. How much they just pump out the mortgage message all over the airwaves. Yet the average consumer wants the shiny object, which is the home.
Right.
Then they figure out how to pay for the shiny object. But when they come to you first, because you're in front of the shiny object or inside the shiny object for that matter, it puts you in a position to choose who you're going to introduce them to. There's a power play there. And honestly, it's the bane of my existence, of my professional existence, because it's not something I want to have, but I have a lot of agents that say, oh, well, I'm the one who has all the control over the referrals, so you're going to do this, this, and this.
Exactly.
And it's, then you realize at some point, this may not be a partnership.
Yeah.
No hard feelings. We're just not a match.
Right. Yeah. And it's something that you constantly have to navigate. You don't, I'm sure and that said, there are situations where you come across a buyer or somebody that wants to refinance and is now talking about, maybe I'll sell and upgrade and do those different types of things. So with that, what do you think are reasonable requests from an agent? What makes sense? If it's, hey, I'm working an open house and a buyer comes through and I ask them, hey, are you working with anybody? And they say no. And I say, have you spoken with a lender about what you qualify for and they say no? Is it how do you personally like to see business pass to you? How can agents tee it up for you best?
Sure, I appreciate you asking that. I would say, on behalf of the agents, you should be able to expect a lender to do a full pre-approval, not just some pre-qualification where it's tell me, don't show me, because that's where all the problems tend to stem from. Is there may be a disparity down the road when you finally do show us, and our perception of what you showed us was different than what you told us up front. What if there's weeks, if not months, of home searching in between that disconnect? Not cool. I would also say that you really should expect us lenders to communicate with you. If there's an issue, let's get out in front of that. Let's handle it right away. Sometimes we have issues with the appraisal.
Yeah.
The property has issues. Homeowner association, that happens quite often. So I think it's really important to just have that. Sorry, I have a little technical.
If your shirt falls off right now, like the old school Super Bowl,
you would think all this gel in my hair would just hold this thing in place, right? I mean, come on. No, I think it's really just, it's important to communicate. And at the same, I think if you have those expectations, and at the same time, realize we're all human. None of us are psychic, at least not that I know of. So if you have expectations, tell us. Don't make us guess. And we should be the same way with you.
Yeah.
Again, it goes back to partnership. It really is both sides really looking out for each other's best interest.
Well, it's been great having you on. I definitely, you've brought a lot of good ideas. I love the idea of a true partnership,
right?
And of really running the business equally, making sure that the communication is equal, and working within some guidelines that are both professional and courteous. And I don't know what you heard, but I heard that Jason is a psychic lender. That was basically what
that was my key takeaway.
That was my takeaway.
And I work 24/7, and I answer the phone when I'm in the dentist office.
At the dentist office, all of that. Thank you for joining us. I mean, just some great bits there, some great little sound bites for us both to really take away. Obviously a wealth of knowledge, and I like that you have your little niche, that you have something that's specific to you. I feel like that becomes an easy referral partner for many realtors, for us, for our listeners. So thank you again for being here with us.
Thank you, Gordo.
I really appreciate you having me. And just to keep the compliance people happy, my NMLS ID is 259027.
There we go.
And if you ever need to reach me, my electronic business card can be found at VIPborrower.com.
And in the description of the podcast too. We'll make sure to plug in Jason's information for you.
And actually, that's a good idea. In order to stay in compliance, I want you to know that my favorite color is gray, and that I like black licorice, not red licorice. Thank you for joining us here again on the Contingent on You Listening podcast.
You, everyone.
We hope to see you very soon.
Make sure to like and subscribe. As always, Steve. Come on.
Look at Mr. Social Media over here. He does bring some value. See?
Thanks, everyone.